Just a small little live stream today. So, what is going on at the moment? If you saw on Friday, you saw that the European Union came out with a new CPI number, and if I remember correctly, it was about 10%. That is why, maybe not why, particularly specifically, but one of the reasons why Euro USD is currently rising pretty hard. Now you're wondering, like, why, but euro has had high inflation and your dollar is generally falling. Yes, that is true, but if you look at this number, yeah, 10% there, yeah. If you look at that, it is generally euro dollar down over a more extensive period of time. And then this morning you can see that we are seeing some yen weakness, but we're also seeing euro yen going a bit higher, at least for the last candle. And we saw on Friday that we had a bullish reaction to the market to the news, other than on Friday Aussie yen and New Zealand yen went to my stop losses, and I lost, like, what was it, $12 or whatever. Other than that, currently going over the outlook, or what we are supposed to be discussing today, is that going forward now, there's a lot of news from, what do you call it? There's a lot of news from Ukraine. They're taking more and more towns. Does that have an impact fundamentally on the markets anymore? Not really. To be honest, not really. The thing is, and the reason is that we have priced that out. I saw this morning that OPEC is going to have are discussing price cuts. No, sorry, production cuts. That is positive for the oil, and that is important news that we need to consider. So as you go through the list of news, of fundamental drivers, of supply and demand, of anything that could move the markets per se, not technically, is of importance. We talked about this before, but a war in Taiwan, between China and America, is definitely going to be bad. It's going to mean yen strength, it's going to be dollar strength-ish, the Chinese yuan, I think it's called, will fall. The other thing that is also pretty interesting, but not really, well, it is forex market related, but not that much. I saw that Da Silva won the election. I think he won, or this a re-election. At least he was at least the most popular one. A former president of Brazil, but was he charged for corruption? Heavily involved in corruption, accused of corruption, somewhere around there. He was less leading. I think he also won the election in the end. That is a market mover. Because why? State governance, corporate governance, state governance in the market is important. You have the UK at the moment. You have Liz Truss, which has been called a lunatic, but it hasn't been positive for her. That what has happened lately is that they have come out with an uncovered. They haven't found out find out how to cover it, and they are going to give tax cuts, which is going to stimulate the economy to go faster. The only problem is that the UK CPI at the moment is around 9%, way above the target of 2% for United Kingdom, and it's so weird. Yeah, 9.9. It's so weird that you have a government that, I guess, is out of ideology, justice. You have seen no other countries, so it's UK now and Japan. And on the flip side, you had then the bond market for the 20 and 30 year or the 30-year yields collapse. The pension funds left the building, and that's why you had to have QE. That's why you had to have QE, because they had to come out and start, being saving the market from not crashing, even though it no longer was functioning as intended. That made, pound fall up and down, fall and then rise again. But what do you mean, mate? Does anybody of you understand what this means, this chart here? Where this has come from? COVID. This is the same chart as COVID. This is how the market moves with shocks. Not fundamental shocks per se, but more like financial instability shocks. Take a screenshot of this. Learn, when would you enter? How will you trade this? This might not be the what do you call it? It might not be the holy grail, but it sure is a very key important move to know. Okay, fair enough. What else? Market was largely risk off mode. Well, I bought yen pairs last week. Of course, the worst one. The worst performing one. Any feelings about that? No, not really. Because if you guys remember, for those who remember, this chart is my trades. This chart is exactly what I have been expecting since Jesus was born. But anyways, everything is working smoothly so far. So a bit of risk off doesn't really matter. European inflation, as I mentioned, surprised the upside. UK markets went frenzy, and geopolitical tension expanding the Baltic Sea, and risk are skewed towards inflation becoming enhanced and central banks being forced to rake faster. Now, there is going to be RBA tomorrow, on Tuesday. Yeah, they will either have a 25 or 50 basis point rate hike, and the RNBZ will be having a 50 basis point on Wednesday. I think that is kind of the only thing that is actually on the calendar that is actually of importance this week. So let's take a look at the calendar. We have manufacturing, PMI, we have RBA, we have some speeches. Oh, we have CPI from Japan. Okay, fair enough. Retail sales, nah, not so much. And then we have, of course, NFP on Friday. Okay, so 3 major events: the RBA, the RBNZ, and NFP this week. Okay, so fundamentally, let me just try to explain the picture here and how things is working at the moment. Okay, inflation is too high. Growth is slowing down. Wages, at least is too late to the table because because you only negotiate once a year or every 6 months now. So wages are going to come up. I don't know who it was. What was it? There was somebody talking about letting go of customers. Nike came out and said that, well, we have full stocks, or we are also full of shoes, but nobody's buying them. So you have all this. So you have indications of something is not right. We haven't seen mass layoffs yet. So I don't think that the NFP on Friday is going to be too crazy. 250,000 is expected, which is moderately okay. There's nothing wrong with it. It's nothing particularly, nothing specifically, but just going forward. Okay, that is an okay number. So how do I grade it? It's if it's above 500,000, that's strong increase in labor market. If it's around 100, it's all right. It's not too bad. But there's still growth, but it's not like fantastic growth. And unemployment rate at 3.7, which is practically we have turned around. We have gone back to where we came from, and we're now back okay how we were before COVID. All great in the grand scheme of things, but with the rising prices of energy, of gas, of house loans, car loans, as a financing, we are in a situation where we don't know what's going to happen next. And it all depends, to be honest, how strong the banks are. Now, we're going back to a financial crisis if they are not. If, as I've seen reports of, that Credit Suisse has potentially a lot of junk bonds from China, they were on the wrong side of GameStop in 2020. And then they might go over, sometimes they go over now, but if they are not in a great financial position, that could, lead to at least them falling over. Now, that is just a general thought. That it might be true for them, but if that is true for many banks, or more banks than we know, that is a crisis that we haven't priced in yet. Okay, always expect the worst. So this impacts the market directly. Okay, and what we are going to do forward with this information is we're going to be cautious. We are not going to be, wow, look at this crazy market. Oh, we're going to buy, we're going to sell, we're going to do whatever. No, we're going to sit down. What happened in the yield market has got nothing to do with it. Okay. Okay. Another one that doesn't know what he's talking about, but okay, fine. So it's been dollar strength, though it's on pause at the moment, which is always fine. Yeah, it fell a bit, fell something. Going forward into the month of October, can we have a deeper retracement in October? Like, can we be it down to like 1010? Can we down to 109, 110, 109, 108? Yeah, sure, we can. But I think we're just going to touch the center pivot here. So we are around the price we would like to see. Because I think that we're still going to continue down this path. We're not done yet. Which has been a crazy path, by the way. Of just continue rising. I've seen multiple reports saying that a euro dollar will go down to 0.96. But we're already there. We're already at 0.97. We were at 0.96 on Friday or Thursday. But this small pullback on euro dollar is very small. Now we can go higher and be like, okay, we can go up to like 3 for the month, which is around 1. But still in a very aggressive trend. So inflation out of Europe came out higher. The inflation in America still hasn't reduced. We're still looking for more rate hikes. We are still hearing a lot about crashes, about recession, about energy crisis. All these crises that is around you. Compartmentalize them and ask yourself, how does this affect the market? And does it move the market now? So if you look at the charts right now, is there a crisis in the market? I wouldn't call it a crisis, but I would call it a very strong win to the downside. Yeah. Because if we were in a crisis, we would be straight down, wouldn't we? We would be going down, 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 down. As we will be that market the whole time. Almost no pullback, just continuation lower. So don't freak out. Don't be like, oh wow, this is crazy. But there's going to be an interesting time ahead. My small prediction here is I think pound should rise after this fall, which is basically just market behavior, which is currently doing. And then there's going to be a time where we're going to price in again a crisis. So far, it is technically bullish for pound for some time. I just don't know how long time that for some time is. I guess it depends on the QE. They were going to do QE for 2 weeks, I think it was, and limited until the market settled. But you can see here we have GDP from 10 to only 4. So we need to really discuss with ourselves when we come down to also to 1 or 2 GDP growth, or even negative. When will that happen? Will it happen? And I think we're just going to be data dependent. You see here that business confidence is negative. You see here that consumer confidence is really bad. You can see that retail sales is not great at all. You can see that, yeah, I was balance of trade is still poorly though, but yeah, and then interest rates are still rising, and we still have 9.9% interest rate, inflation rate. So for UK in particular, it's gonna be up soon, no, up now, and then down soon. It depends for how long. I don't know. Maybe to a target of the week or the month or so before falling, or until there is a strong bearish news again, as in what can that be? That can be lower inflation, lower GDP. That could be higher unemployment rate. That could be business confidence, consumer confidence. That could be anything that the government does. Just almost anything that will lead to that shows that the market at the moment is going to fall pretty hard. Now, how does all this connect to each other? Is that GDP, inflation, and unemployment some are interrelated, but it's kind of is the most important indicators at the moment. GDP is also 3 or 4 months late, but it's still PMI is forward leading. And if you look at manufacturing PMI and services PMI, they're not great. They're actually not great. They are below 50 and they are falling or having fallen for quite some time. So that is concerning. And this is where you might be looking. This is where you might be looking first before be like, okay, because you can see here we have a quite steep fall from 58 around January 2020, March 2020, February 2022, down to now, which we had a small higher again, but I don't think this is going to do anything different. All right. Have a great day, everyone. I don't know if you learned anything new. Hopefully you do. We'll be live to later today, and then we'll go through Forex setups. Until then, adios.